Will inflation cause a hurricane on the stock markets, Martin?
I don't know if it will cause a hurricane, but I decided to put my yellow polo on just to bring some color in all the negative news that big CEOs
I'm not
are
saying anything about
Yeah, but if you read the nowadays what's been coming out this week on CNBC and on Bloomberg and all, they're very negative about what is going to happen. And what is going to happen, Casper? This month they're starting with
downsizing the balance sheet of the Fed, you mean?
we have all the time had it about QE1, QE2, and now we are starting in a new phase, and that's called QT, quantitative tightening. And
there's also a picture this week of Biden and the chairman of the Fed, Powell, sitting together. I think it was in the Oval Office, and it was only the fourth time that they met.
Biden. Yeah, sorry, I was thinking about somebody else.
And what I saw, I think they their offices is only 1 kilometer from each other, and that's only the fourth time that they met each other. I only saw it coming by, so like I said, it's from. They are maybe not in a really good relationship if you're so close by that they only met for the fourth time.
I'm not fully aware on how these relationships run. Is he on a close? Normally he should be on a close.
Yeah, but of course, Biden focuses more on the growth of the economy.
Yeah.
So he maybe wants that the Fed won't
start reducing the balance.
What give us an insight?
What they are going to do is basically, first of all, they're going to stop buying, of course. And that's two components. They have normal like securities, like stocks and everything. That they're reducing that with approximately.
Mainly bonds.
Yeah, that's two components. It's treasury. That's one component, and the other component is security-related treasury. So you can interpret that. This is very complex what they actually buy. It's not like you can say they buy Chevron or buy Shell or anything like that. So there's two components, and they're starting to reduce the treasury part with 17.5 billion a month. But important to notice is that it's not a huge amount. If you see how much is on the balance sheet, it's 4.7 trillion. But they also stop buying, so they're going to stop putting new cash into the system, and on top of that, they're also reducing. They're selling bits. So if you look at larger asset managers in it's sometimes funny to watch. It's all Jim Cramer, for instance, and what's the guy's name with the ponytail and the trading, and they're all about selling semiconductor stocks and this. They're very cautious at the moment, and that is also what Jamie Dimon said from JP Morgan. He said banks now are in a very, very good situation cash-wise. They have a lot of fat on the bones, as they say in the Netherlands. And we should actually do something back to get the speculation out of the market so that people don't have, for us, of course, we think investing is the way forward. But he says we should do something back now to give some interest so people don't have to speculate on maybe small cap stocks and take a lot of risk on.
That's what he also said.
That's what he said.
Give the people some interest.
Give the people some interest.
Based also on the high inflation.
So you calm the market down, and so that was one of his points. But he's very worried also about the inflation. There is at the moment in the US, I think it's 8.3% was the last figure that came out. Of course, driven mainly by oil. No.
Yeah.
Oil prices are extremely high. You see 100 and something for a barrel, and his expectation, of JP Morgan's expectation, is that the oil price will go above 160, 175 dollars a barrel. And then he said yesterday, Wednesday. But I think that was maybe before Saudi Arabia said that they will jump in when Russia is indeed stopping to deliver stuff to Europe.
I think we showed in the past many years ago. When was the oil trading at $20?
A year ago.
No, but the like 10 years ago.
Oh,
also.
That's what you mean.
And then we made. Then we said, okay, if you believe that oil will ever go to 40, you double your money.
Yeah.
And then you saw all the scenarios of Goldman Sachs and JP Morgan, everything, and the one said, okay, it's going to be 30, and that's. If you see all the different estimations of all the important people, then always one of them is right, but they differ so much from the opinion. I saw also from the Dutch analysts, and it's all based, of course, of the war in Ukraine, or not all, but for a big part, because EU said this week that they're gonna ban oil from Russia, but that's not completely true. They're only gonna ban the oil that's transported by boats, by tankers.
Ah, okay.
And that's 75% of all the oil.
That is a lot.
Yeah, that's a lot. Yeah.
I'm still curious, because you remember that I spoke to somebody that actually works for one of the larger oil companies, not in Russia, but I said, what is happening with your colleagues there? They can't shut down. If you're working for a European oil or US oil company in Russia, it takes years to shut down an operation.
Yeah, you can't put
because it just explodes.
Yeah, you can't put the switch to bottom off.
You can't do it. So they still need to do something with that stuff.
But also the EU said also, first it was expected that they will start with the ban in 2022, this year.
Yeah.
But now it's postponed to 2023. And that's the market thinks that they can replace instead of 50% but 75% of that oil from Russia. And that's in the same week that the Saudis, but also the OPEC announced, okay, we're gonna help you delivering the last 25%.
Yeah.
And that's a lot of people also more in Europe, they think that the oil price goes down to the top will be at the beginning. They say also the top will be beginning of 2023. Maybe because
then it will
of the
go up
SWIFT.
even further.
And then it will go down. But again,
we'll see.
they say that, and the other ones say that.
It's very complicated, and to find a consensus in there is even more difficult because they all have different.
Yeah, but also if you look at I think what's interesting is if you look at the markets, at the oil companies, for example Chevron, it's expected that they have a price earnings per share, of $16.52
for this year.
Yeah, and it will go down next year to
The
40.
price is approximately, I think, 175-ish of Chevron, I think.
I'm not sure. I can't say yes or no, but I'm not sure. But the important thing is they expect that it goes down to 14 something next year.
So
Total is it's going from 11.71 earnings per share down to 9.82, and that is for all the oil companies. And what you see there, they expect high revenues and profits this year, but it all go down next year, and that can have some components, but probably one of them is that oil price will go down.
Yeah, of course. Yeah.
So the market thinks that the oil price is going down.
Yeah, that's why they have this negative for like the adjustment of the price earnings for downwards.
Yeah.
Yeah, if you look at the banks in that scenario, I mean, there's a completely different sector, completely different things that are in play there. Of course, also affected by inflation. There may be not so much. I mean, I'm saying something. Not so much driving inflation. Oil is clearly what makes inflation. If oil prices are high, inflation.
If you look at Holland, the Netherlands, in the inflation figure in May, 57% was because of energy.
And I think financial services are in general not one of those drivers. No. But if you think about, or if you look at the expectations there, I mean, in the US you have 5 main players, and then if you look at assets they own of
players,
their
what
client.
kind of players?
Players.
Sport players.
Players on the financial market, banking players, or
banking.
spelers op de markt, as they say in the Netherlands.
Yeah.
And of course the largest one is JP Morgan, then you have Bank of America, Citibank, or Citigroup I should say, Wells Fargo and Goldman Sachs. And there's one other, if you look at the market capitalization in the stock market, not automatically the guys that that have the most of the assets also are the biggest on the market, because there's a smaller bank, TD asset-wise, TD Ameritrade, and they are with market capitalization on the stock market the number 5. But if you look at the expectations there, it's just the opposite of what you've seen with the oil companies. The oil companies, they expect that it will go down, that the earnings per share will go down, so they will make less earnings. And with the banks, Wells Fargo in this case, they expect from here to 2024, so that's 2.5 years, that they will earn 46% more. And the average for the US banks is about 20 to 25%. And
do you know why?
I didn't go that deep. I was figuring out.
What do you think?
Yeah, I think
Is that maybe,
because of the interest.
Because maybe the market thinks that the interest rates will go up.
I think that's what you see obviously there, and the banks benefit from that, and they will give more interest and they earn more on a mortgage, etc. But it's funny to see that that Wells Fargo, which is one of the weaker performance amongst the US banks, that has the highest expectations. If you look in Europe, the Netherlands, for instance, an ING bank, they expect to have a 67% growth on the earnings per share. So the banking sector is looking positive.
But you're Jamie. Does he
My
think,
friend Jamie.
Yeah, you're Jamie. Does he think a recession is coming up?
Yes. He spoke himself how he thinks there is one coming. Yes.
And what does he think about then that the Fed will do?
There we go. Now he's going to ask me difficult questions.
No, but I'm curious.
So what is your friend of CEO saying of Chevron? What do you think about? What did he say about the oil price? So let's turn this question around. What did he say?
I don't know because I don't know his name. I don't know how the guy is called.
I mean,
John,
the
John.
reason we talk about Jamie Dimon is because he had a speech last week for his shareholders, and he said, yeah, I think there's a storm on the market. And yesterday he came out again. He said, I have to rectify myself. I think there's a hurricane coming, and he's really worried about everything that is going on. But because of two main drivers.
But
I think the Fed is going too quick. It's gone. And I think we were just every preparing this. We're looking at the fixture, but it's actually very small numbers. No.
Yeah. What they want to sell from the balance sheet. You mean?
But they expect huge volatility in the month of June.
I also saw that the market thinks that for in the eurozone that the inflation will drop next year to 4.5%. So you see already the last 3 months it's going slightly down, and the energy prices in May are 60-something% higher than May last year. So that there is the big component. So it's all energy driven. I think the good things that the EU sanctions only start in 2023. It gives our market more time and the OPEC, etc. So it can be that if you have an inflation figure of 4, then it's not too bad.
No, that should not be too bad. No, I agree with you.
But if the recession is coming up, probably the Fed will stop directly by.
Yeah, they have the capability to stop as quickly as they want.
Yeah.
But I think
I think that Biden said.
Do you think it's a snowball effect that they create, something like that because the Fed is doing and that other people will start following? Because that's what they also spoke about in one of the videos I was watching to prepare this. They said, yeah, you see many of the hedge funds are moving out of equities, like they're selling, for instance, semiconductor stocks, and they were selling. There was one guy that sold all his exposure into the Nasdaq. And
yeah, but what do they do? Those guys need to place the money somewhere.
Of course, yeah.
Where do they place the money?
Yeah,
then?
maybe more into. But that's what we talked about a couple last weeks ago. The discretionary and the staple stocks, they're also really performing not so well.
No.
The Walmarts and stuff like that. So.
And it's also that the inflation in Japan is not that high since the last 40 years.
No, because they do something there. Eh?
Yeah, but look, this is inflation.
Oh, you got a figure for me.
Here.
Look.
0. 0 point something over the last 40 years.
You think that's good? The yen has really gotten weak, over the last 3 months.
Against the dollar.
Yeah, that will take some time. But it's clear because I spoke with one of the currency trader and he said, yeah, it's obvious because if the dollar goes, if the interest rate goes up there, you have just movements of money. I
think there's a big chance that the interest rates go up a little further, and if a recession comes around the corner, then there will the Fed the first, and then you ask is a snowball effect. I think yes, definitely, because not because of the Fed, but it's because the same effects will occur in Europe, and they will do the same. Start buying another time, buying bonds. I think so.
No, but I was more referring to the fact that people saying there's coming volatility because of the Fed is selling, that also other institutional players are starting to sell stuff, which will then cause the volatility. That I was thinking about as well. Not that the ECB was following the Fed. No.
Yeah. Okay.
It's
you mean the market?
There's all different sorts of scenarios possible, but it is clear that that I think we all know that when there's low volatility, and now we have slightly higher, but after low, always high volatility comes.
You know what? I saw figures in the Netherlands. What became what kind of food or drinks rose the most in price in May?
I don't know.
Think about your shirt.
Bananas.
Oh, it's the same color. Well, I have to charge for you. Oh no, yeah, that's interesting. So you think in yellow and food. You think first about bananas and then beer.
Yes, because I was cycling and then I had my banana. When I get home, I have my beer. So that's the butter and margarine. Yeah,
it rose how much?
27%.
Yeah,
ladies and gentlemen, 27%.
And then meat. But the good thing is that here, low at the list is wine.
Wine is getting cheaper.
No, it's not getting cheaper, but only increased 2%.
Okay, well, That's within
Right.
our possibilities.
Huh?
Now,
So-
let's round off with that.
So not everything is getting more expensive.
No.
Wine was
The
only
good
getting
things,
2%.
the good things. The butter is not so good for you, and the wine, of course, is maybe better for you. So.
So if you buy normally a bottle of wine of 10 euros, it only increases with 20 cents.
Yeah, there's nothing. There's nothing.
That depends on how much you drink.
I think that's a wrap, no?
Yes. Thank you. Interesting times, and I hope that your friend Jamie
Yeah, I'll.
is not right.
No, he's standing there. So Jamie, we'll
Yeah,
talk
the
about-
thumb.
The thumb, yes. Yes, Jamie. There's a thumb. Speak to you next week. Bye.
Thank you. Bye bye.